Hi, this is Randy Finney with Right Side of the Chart, and today is Wednesday, January 19th, 2022. It is 10 o'clock a.m. on the button. Wanted to wait till trading got underway and get a video out to you guys. I promise this won't be one of those uber long 40 plus minute videos. We'll just stick to the broad markets here, the major stock indexes. This is, and I'm going to just say in a nutshell up front, I think one of the most pivotal or potentially pivotal points in the stock market that I can recall in quite a while. We are just sitting above what I believe to be a technical cliff. And as I like to say, support is support until unless broken. We've had quite a few check marks lately for the bearish case. I want to just reiterate that my intermediate and longer term outlook has not changed, but it's still not that all-in moment because there's still a few more check marks needed. Remember, sometimes you go to the edge of the abyss, you stare down in it, and then boom, you rally. In other words, the markets will test key support, look like things are going to break down, but they don't. That's been the MO for a while. I want to make clear I still think it's going to happen, and we're so close that you might as well wait for those check marks. If you want to really go aggressively short. Now, on the flip side, I tell you where I think things are going. Tell you why I think things are going that way. But at the end of the day, I provide technical analysis. That's what this service is about. I give you my thoughts. I point out levels. You can factor that in, and you should, with your own analysis and your own views to where things are going. And so, therefore, if you are bullish, you believe this market has a lot more, the bull has more life left in it, and we're going to go to new highs from here or soon, and then this is where you can step in and buy, as I told you this morning. All right, so I'm going to go through here's what I'm going to do. I'm going to go through the charts of the major stock indexes, S&P 500, Nasdaq 100, and the Russell 2000 small caps. I'm going to start on the 60-minute time frames, and I'm going to work my way out to the weekly real quick and give you my thoughts as to why I have those views as to where we're at. All right, so first and foremost, I got the chart out to you this morning. This is the first time since right here, that was back in mid-December, that we had positive divergence. At that point, we had divergent low. There was your divergence line in price. We had the PPO right there, positive divergence. Futures had divergence. Before that, we had divergence right here, positive divergence. And right here, we had divergence. This was T5 was hit there, and that led really, if you held the whole time, that led to that. What was that? That divergent low was good for a 12.5%. But more so, I look at an active, swing trader looks for these divergent highs right here. You had a divergent high. Let me take a blue that circle tool and color that divergent high correction, right there. Here you can see it. Divergent high correction. Divergent low right there. Rally, right to that point. Up to that point, and that was divergent high correction, divergent low rally, divergent high correction, right to where we are right now. So it's a wash, rinse, repeat thing. All in all, we've been moving higher, and again, so those are the divergences. And now, so again, I'd be remiss not to point those out to you, that they are now in play. We almost have a bullish PPO crossover here on the histogram. In the PPO itself. That will confirm that divergence if we get it. And now, bigger picture is you got to watch this. The uptrend line right here was recently broken. That's going to be resistance. And we had a pretty significant resistance level there, about 460 and change. So those are the levels that this thing could stop at. Here's my thoughts in a nutshell, and I'm going to again go through the different time frames. I think this time will be different. Normally, especially in a primary bull trend, you get these 60-minute divergent lows, and that's usually the rally or the technical catalyst for the move up to the next high, new highs. And it may not be any different. If you are of that mindset, or let's just say you're a completely agnostic trader, you're not a bull, you're not a bear, you don't let any of your biases, you don't even have longer term, intermediate term biases like I do. You think the market's just gonna, you don't even care. You're only trade mechanically off the 60-minute time frames. Let's just say this is where you go long. You go long here, you have support right below, you go long here with a stop somewhat below this key 451.50-ish level. That's the bottom of the recent trading range in SPY. And because if that happens, you're going to have several check marks. Number one, you have this negative 0.56 level right here, that purple line. It does a great job of defining bull and bear trends in the SPY on the 60-minute time frame. I'm rolling back here in time. That's as far as my 60-minute chart will go back. We're way back into April, even March of last year. And you can see how well this thing defines bull and bear trends. I look at the white line. That's the 9 EMA, the signal line, because it's the last of the two to cross. So by ignoring this one, the PPO line, it helps filter out whipsaws. And so not only does that line define bull and bear trends, in other words, when the signal line is above it, the trend is bullish, and that's what it's been, the primary trend on the 60-minute chart. And not only that, it also acts as support. You get these pullbacks to that level here, 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 the white line again, here, 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 here. That's pretty good stuff. So here's what we need to see to get what I believe to be a very powerful sell signal. And again, not trying to be dramatic, I think we'll get that really impulsive selling because so many things coming together. Again, it's a pivotal point. If we get that, we break the bottom of the trading range again with conviction. Now that means not a little dip and a reversal real quick, but a solid move down through there. Let's say a 60-minute close, especially a daily close. If that happens, we're also going to get this divergence taken out. That means we move over, the PPO will drop below the previous reaction low, and the RSI will, so you no longer have the divergence. You can move, that would also drop us below that 0.56 level because we're coming on it right now, right? So you're going to have, gosh, 1, 2, 3, 4, several sell signals, bearish developments, and again, I'm going to get to longer term charts in a second and show you what it would do there. That's what I'm favoring. It's a highly contrarian call because again, these 60-minute divergent lows for a long time have been the catalyst for usually the run to the next high, but I think they'll fail, and so I'm sitting tight with my shorts, even though right now, again, I can make a very strong case to go long, cover and go long. And again, that's your call if you want to do it. And you could even have another jog down today as long as you hold that. These divergences may stay in place. Most important is really price support, in my opinion. But anyway, that's that. Let's just walk it down on the let's go to the other securities and then we'll walk down to the longer term time frames and we'll wrap this video up. So here's QQQ. In pre-market, I had that line there. I got the chart out to you I took in pre-market because you had some pre-market trades that took us down there, gave us that divergent low, but we still have positive divergence. All you have to have is equal or lower lows in price with higher lows in the indicators. So that is 110% genuine positive divergence. It's not confirmed because the PPO needs a crossover. And again, I have two lines here on QQQ. I have negative 0.49 and negative 0.77. And so if we look at that white line, again, you can roll back for a long time and see that it's the trend has been bullish all along. And so that's one thing. We had a little dip here recently. Remember, the Qs have been weaker than the S&P. So, but when that happened on QQQ, that drop on with the signal line below that 0.77 level, you didn't have it on SPY. So if they can both break down, you're going to get a check mark there for the bears. You also want to see this divergence burn through. And when I'm going over these, check mark for the bears, so to speak, that's also check marks for the bulls or anyone going long here to stop out. That's where if I bought QQQ here, reverse to a long position for a ride up, that's where I look at these and whether it's one hard stop or you start scaling out, support's broken, 369.50, we drop below the solidly below that point, negative 0.77 line, the divergence. Each in these, and they'll probably coincide roughly together. Big check marks for the bearish case, and also a reason to get out of your longs and in my opinion be aggressively short. I'm still short with swing positions, and if and when we take out those levels that I just mentioned there, it's pretty much that all-in kind of short moment for me. But until that happens, I like to say this, support is support until it's broken. There's been many times I think the market's sitting on a proverbial technical cliff, where if it can just get a little more downside, will start to fall off that cliff and we get some big selling. But as I like to say, support is support until unless broken, and that's what this is. You want to strip away everything where you think the market's going, where I think it's going. All I can tell you right now is I'm going to show you positive divergence right here. And if you took that positive divergent, that divergent low, it was good for a 17% rally, right? I'm just measuring, using that line to measure. Next divergent low was right here, positive divergence. There's your rally. That ended with negative divergence, which I'm gonna put that line there, right there. That was really right here. That divergence line somehow got shifted over. That might have been on the 60-minute chart. There it is. It's bugging me that these lines aren't set proper. Oh yeah, because we had it at the time. I guess I drew it. We had divergence there, and it worked. Played out for a correction. Then we had another kickback, made a roughly equal high with negative divergence. So look, simple stuff, right? Divergent high, correction. Divergent low, rally. Divergent high, correction. Divergent low, and also to support. Remember, it's not just divergence. You want to see if markets fall to support or security fall to support with positive divergence, or rally into resistance with negative divergence. Those are objective entries. Or you wait for trend line breaks or bullish or bearish chart pattern breaks. And so that's it. Point I'm trying to drive home. This appears to be the most objective long entry in a while, at least since this divergent low back here, or this one here, or this one here. But my money is on a failure. Could certainly see it come up, and let's look at those levels where it may fail, and these levels also start to, not anytime soon, but one by one will start to chip away at the bearish case, or at least give a near-term check mark for the bulls, and that would be a rally above this resistance zone here. I'm really looking more, well, let's just call it the zone for what it is, 15,494-ish to about 15,543. That's resistance there. That's where we could get rejected. If we pop it, again, that's just going to show that these divergences are starting to play out. I'll have to drop down to a 60-minute chart. This is a 120-minute chart. I should have been clear on that. I was on 60-minute before. But that's it. So look, the takeaway, not to beat a dead horse, we have positive divergence at support. You need to see this divergence get taken out and negated. This is a 120-minute chart. I'll get to the 60-minute chart in a second. And there's that if things get ugly target. So if the divergence fails to materialize for anything more than just a small bounce like we've had so far, if we go and take out that low, especially if the divergences are taken out, I think it'll be a swift move down to that next target here on NQ, about 14,424. Let's take that down to a 60-minute chart. Here it is, NQ. There's your divergence. This is the biggest divergent low we've had in a while. I mean, we had divergence right here. That was a divergent low, and we rallied. We had a pretty sharp rally. This is twice, over twice as big. So it would indicate, again, a rally back up to at least the top of the trading range or close to it, and quite possibly blast off to new highs. And so again, if it fails, I will consider that uber bearish, akin to a false breakout. It's not a failed breakout. There's two ways to go objective long entries: either break out above resistance or bullish chart pattern, or pull back to support with positive divergence. So again, this by all accounts should result in a pretty strong climb over the next few weeks here, or at least coming days to weeks in the Nasdaq 100. And if it doesn't, then quite bearish. All right, so now let's go to ES. While we're on the short-term time frames, we'll walk it out to the daily and weekly, and I will wrap this video up. Let's find ES for you. My apologies. Sometimes these charts get shuffled up. No, I see it. Okay, there's ES. And this is a 60-minute chart. So again, there was our last divergent low. And again, it's not as if these things don't work. They almost always, not always, but almost always result in a nice rally. That was a nice tradable pop there. Now we have even larger, much larger divergence. So there it is. And here, the resistance levels or support levels on the way down then become resistance on the way up. So these are the potential stopping points for this rally. And it's all, let's keep it simple. It's all about taking out these recent lows. You also have a major reaction low right here and then one there. But SPY, remember I showed you, and I'll get to it on the daily chart, has a little bit more support. We're kind of in that big trading range here. Let's do that now. Let's jump out to the daily charts of these. Oh no, let me give you RTY for you small cap traders. Again, divergence right here. There's your divergence extended right there. Roughly equal lows on the PPO and higher lows on the RSI. And this is a major support down here. Remember, and small caps are testing major support, about as solid as it can get. I mean, honestly, on a scale of 1 to 10. Here, let's jump over and let's get to the daily charts now, and I'll show you that. All right, so there's QQQ. Here we go on the daily. And remember, we had this previous high right here, but we came and tested it. When we back tested it, I'm going to zoom in. It came a little bit below the actual, that level there. Those are 2 tests. And we dropped below that. So that in itself is bearish. And now what I'm doing is I'm walking out to the longer time frames, and I'm telling you why I'm overriding what I'm seeing on the short-term charts, where again, normally on a 60-minute time frame, I get those bullish divergences, pull back to support. That tells me cover shorts and go long. And now I'm telling you why I'm overriding that typical pattern or setup. And that is this. So we failed the breakout. But that was, for all intents and purposes, a back test, because I always talk about that. You don't always make a perfect back test of a previous high when you break out. And the fact that these two came a little below that set up, level here, that yellow line I give you at 377.64, and we're below it. But again, as I said repeatedly, we have to take out Monday's lows right there, right? Monday from last week, of course. And we need to take it out solidly and on a daily time frame. And, we pierced it pre-market today, but that doesn't count. We need to take it out during the regular session, and that's it. So we're below there, and we've had a lot of sell signals, and so therefore I think it'll be quite bearish if these divergences on the 60-minute chart don't materialize. The other things I'm watching on the daily chart of QQQ, you can see down here. Remember the PPO. Use that signal line as a trend indicator on multiple time frames. This is a daily time frame, and I use the 9 EMA, again the signal line, which is the last of the 2 to cross. It's a white line, and I have 2 levels. I have negative 0.57 on the daily chart and about negative 0.88 right there. And the negative 0.88 is really the final straw. Sometimes you'll stay above, or this level act as support, but you can see I'm going to roll back here. Going back for years, the only time that PPO line has gone through there is during significant corrections. That was a brief dip, and it was a pretty good correction. That was that huge drop near bear market in quite a few indexes back in the 4th quarter of 2018. We went below there, and once we did, you can see on the back test, that signal line, the red line acted as resistance. So it is a great trend indicator, and these are the things I'm looking for check marks. So we need a little more work to be done. And again, that's a negative 0.88 level there. And look how well it acts as support on pullbacks to that level. And sometimes it's that yellow line there. But once you break it, that's it. And that's associated with all the biggest drops that we've had in years. And so that's it, guys. It's a common theme. We're right on the edge of a technical cliff, but we haven't fallen over that edge yet. And sometimes the markets go and stare over at the abyss. Get right there, test key support, and then boom, they hold it and defend it, and you get the next leg up. So it looks to me it's like it's gonna happen, but unless it does, you can't get too aggressively short. SPY, this is the S&P 500 tracking ETF. I'm just going to expand the PPO histogram, and again, look how great that line's at negative 0.64 is where I have it. Look how well a job that does in defining uptrends. And if you're bullish, you want to be as a trend or swing trader, especially on the daily time frame, you want to be long in your 401k or whatever when you're above there, but you want to be out or short when you drop below it and when you come and back test it from below, because that often acts as resistance just as it acts as support there. That's when COVID hit, told you to get out of Dodge, right, or get short, and that was that fourth quarter drop in 2018 right there. It said, hey, trend has changed, and when we back tested, there was another leg down. But other than that, it's done a great job. So that's the work that needs to be done to really put the nail in the coffin, if you will, and open the door for those much deeper, more aggressive targets that I have on the SPY and QQQ. And again, remember, SPY has fared better. So far, this has been a more of well, mostly a tech correction, but I'm seeing a lot of other sectors roll over. Financials, I was looking, I didn't cover it in yesterday's video, but I'm seeing a weakness in the transportation stocks, just about everything. And I'm seeing, semis right at key support. So again, so many things are lining up right now at key support. And again, that's it. I feel like you could just give the market a little nudge. We're on the edge of that cliff, and it should be a swift drop down. Otherwise, look, you want to keep buying the dip because it's worked before. You want to come in here with stops somewhat below. So that's how it looks on the daily chart. But remember, another thing that goes into my analysis is, we've broken a lot of trend lines lately, and we have some pretty decent sell signals on the daily chart. Just need a little bit more to again firm up the case for a much bigger drop. So far, we've had certainly a nice correction, but not a significant correction or a bear market yet. All right, so that's SPY. Did I cover QQQ on the daily? I'm not sure if I did. Forgive me, I'm a little under the weather. I've got COVID again. I had it a couple of years ago. My wife brought it home from a business trip on, when did she come back? Friday, and I got sick, but it's probably that Omicron, and it's not too bad, but I'm feeling a little bit under the weather, so forgive me if I'm a little nasally or foggy-headed here. Here it is, QQQ. Again, if I didn't cover this already, and that's where I'm looping around, there's that signal line. That needs to go. We're right there. Look at that, guys. Right there. That is a, need to see the signal line. Yeah, I did cover that, 0.88, cross below that, and then that should open the door to my daily swing target. It was IWM that I wanted to cover for you as well, the daily time frame, and just look at this. I mean, wow. This is a year-long trading. We entered this trading range back in January of 2021, and it's so well defined. You can just see it here, and that's just powerful stuff. It would be unusual to see a solid breakdown through here, and not have a much larger correction based on the fact that we've been trading in that range for so long. We already had a false breakout to the upside. I have to point out that right now we're slightly below there. This isn't like a nail in the coffin breakdown, but it is, the first breakdown below the range. And so again, the common theme, if these divergences don't play out and we get a reversal here, I think that's going to be a very powerful thing. And that's where we can get, that aggressive, shorts where you just tuck them away for a little while and let the market do its thing. But if you're bullish, or again, you just want to trade the technicals for what they are, go long here. Maybe that'll be a false breakdown, or we'll close a day. It's a daily candle, so a daily chart. So that breakdown technically is not solidified yet, because you have to have a solid daily close below the range. And you can see pretty nice positive divergence forming, and I call it potential divergence, not confirmed, because their PPO needs to make a bullish crossover and put in a higher low, and it hasn't done so yet. And if it fails to materialize, just like on the 60-minute charts, get out of Dodge. That's all I'm going to say. That's where I think things are going to fall fast and hard. Alrighty, and we'll jump over to the weekly chart. That's IWM. You can see it clearly here. I mean, on the weekly chart, I have fewer lines. Just look at that support shelf there. And again, it's this stuff. So as I'm going out to the weekly chart, this is what I'm trying to tell you. It shapes my view as to why I might override and not go long those 60-minute divergences now, because this is a big level. And the daily charts and the weekly charts always take precedence over the intraday charts, in my opinion. I mean, in other words, if you break support, long-term support on a daily or special weekly chart that has a bigger significance than anything going on the 60-minute chart. So, and there it is. You can see for the first time in a while, if we close the week right now where we are today, we're going to close below that 209.23 key support level, the bottom of the range there. That was only a whipsaw intra-week break. We didn't close. And if we can turn around and close today red or tomorrow red, that's going to give you a solid check mark. And again, it's just said it over and over. Probably won't be completely straight down, but I think it can be relatively swift and mostly unidirectional, about an 18% drop in the small caps. You go with something like TZA, you can leverage up. TWM is a 2-time leverage short for the small caps, and TZA is 3-time leverage. And so if I'm calling for a 20% drop, we'll probably get much higher. I'd have to correlate the targets here. That's a weekly chart. Don't put too much into that. Let's look at the daily chart. And again, if you say, hey, Randy, can you give me targets on TZA? No, I can't. You can extrapolate it, or the best thing to do is just time it with IWM. In other words, if you see IWM approach, you don't want to hold out for exactly 170. You might want to cover a little bit above that. We could overshoot it as well, but what I would do is when you get down towards 170, that's when you either cover an IW or TZA short, or it's technically you buy it long because it's an inverse. Or what I like to do sometimes is when you get there, tighten up your stops, put a tight trailing stop, and let it run, because sometimes you'll overshoot those levels before reversing, or you take out support and go down to the next one. And so I like to do that because sometimes it'll surprise me and give me additional gains with minimal givebacks if the stop is hit. Again, a tight trailing stop. Okay, now we look at SPY on the weekly, and again you can see nope, that's this is a weekly right here. There it is. Big divergence, negative divergence right there. Uptrend line was recently broken, but we're sitting right there on that support, about 451 or so. Again, it's that boxed in, that recent trading range right there, which is a back test of this high there. So we take that out, blip. I still think we're going to hit those. I do believe we'll hit the 200-day moving averages, which is a 40-week moving average. And then I have additional targets here on SPY right there, these two. And then QQQ, weekly chart. When we zoom in, remember on the Qs, we're already below the recent trading range. There's that little box I had on the daily. Back tested the high. We back tested several times, but now we're below it, not by a wide margin. So if those divergences play out, this is a weekly chart. We have 2 more days left on the week. They can easily get us back above here, and then that's not even what I would call whipsaw. See, last week, see the green candle? That means we closed at the top of the body. We got back in there. That was only an intra-week break. It was not a sell signal on the weekly time frame, because you have to wait for the weekly candle to close. So that was a stick save, we call that. We dipped below, looked like we were going to certainly do it, but nope, they rallied it back and parked it right above there. And the same thing could happen now. If it doesn't, boom, that will be a sell signal. So I'll be watching this today, tomorrow. If the market turns around, starts to make another dive at the lows, you can wait till 4 p.m. Friday, but if we're, let's say, heading into tomorrow's close and we're way down here, somewhere down there, you're probably not going to get the reversal. You're probably going to get that more powerful sell signal here on the weekly chart, and that's going to open the door then to my targets here, T1, T2, T3. And again, these are the measured drops from the recent highs, which we were shorting at. That's where most of our the objective shorts were highlighted right off the highs. 16% drop, 27 and 34. And then I won't go over the monthly on each and every one. I'll just say that, again, I've gone over this chart. One of my most reliable trend indicators. And if you want to rate a trend indicator or any indicator, sell signal, buy signal, I factor in simplicity with accuracy. What I mean by that is it doesn't get any easier. There's pretty complex sell signals and multiple, using multiple moving averages for crossovers and all kinds of stuff. But as far as something so simple that anybody can replicate this chart is just using that PPO histogram right there, which are the green and red bars. And as I've gone over this many times recently, Each and every one, without fail, zero exceptions. When the histogram is crossed red, it's been associated with these drops ranging from 84%, there's 55, 18, 16, all double-digit drops. And now we're on the 19th of January. So we got a little more than a week to go, but there's a solid red crossover there, or yeah, solid red histogram bar. So what that tells me is the market would really have to giddy up and have a powerful rally to close the month back above there. Otherwise, if we get that monthly histogram cross with the red bar here, and the market doesn't fall double digits, then it will be the first whipsaw in years, if not decades. So that's it. Those are the things I'm watching for, guys. We'll wrap it up here. I told you the video wouldn't be too long. It's 30 minutes, but again, I walked you through every time frame, and I'll leave it up to you guys whether you want to, how you want to trade this. But I still favor staying short for now, especially I'm speaking to a swing trader, and if you're not at your full short allotment, whatever that is, whatever that number, whatever percent of your portfolio, I gave you levels where I think you could just take it up to a full aggressive short position if we see what I think we're going to see here in the next day or so. All right, we'll wrap it up here. This has been Randy Finney with Right Side of the Chart. Have a great day.